Yo, 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 yo. All right. Make sure audio good. And I think I got some background noise. Hold up. Oh, yeah. Get out of that. What's up with y'all, man? All right. So we're going to get into it. Welcome back to JRuss TV. If you're new to my channel, hit that like, comment, subscribe button. We cover all things business, investing, and sneakers. That's something you're interested in? Tune in, join the community. We going up. Good, valuable information. I ain't going to waste your time. I promise you. If you're returning to the channel, appreciate you tuning back in. You already know. Back in business, consistent. We consistent. We consistent with it, man. We consistent with it. So today, going to keep these live streams relatively short. I'm gonna say no more than an hour. I think I'm gonna start doing Sundays at 3 or 4. I think that's a good consistent time I can do for the channel. So I'm thinking Sundays 3 to 4 p.m. Start doing more live streams, things like that. I think that may work for my schedule because I am busy throughout the week. Appreciate y'all joining in. Hit that like, comment, subscribe button. But yeah, we're gonna go ahead and get into the live stream. So first, what we're gonna do is go over stock investment update. Of course, I'm gonna go over the stocks, the plays, see how the portfolio been doing, and then we're gonna get into some reaction videos. Why high earners are still living paycheck to paycheck. It's ridiculous out here. Cost of living is continuing to go up, and even if you're making like 100K, depending on your situation, you still probably living check to check for real. Rent I was talking to my homie last night. Rent 2 bands. Rent rent 2200. Like we're gonna get into that. And then next we're gonna get into a survey video as well. Americans say they need 100K needed to feel secure. How y'all feel on 100K though? 100K, it depends on your situation. Depending on the situation, you got kids, wife, husband, all that stuff. Because 800K, that's a little low to me as regarding to retire. That's a little low. And then the last one we're gonna do is why the first 10 years of investing is so hard. I can speak from this personally, but the first 10 years is very hard. So we're gonna get into that reaction video later in here. But to get started, we're gonna go over the stock investment update. Let me share my screen. So y'all know I usually like to start off with the fear and greed index. The fear and greed index just to see where we at in the market. We're actually neutral right now. We're neutral right now. Okay. Because we had a big sell-off on Friday. Pullback, nice little pullback, which is healthy in my opinion, because you need in order to go higher, you gotta pull back. You're only gonna go but so high in the stock market, and we've been hitting all-time highs. So it's not a straight line. The stock market is not a straight line, bro. So this is healthy. I'm glad to see this, but also because of the jobs report, it came back with a correction, but it was actually way more people unemployed than what was reported the last time. So it was inaccurate data, and the market did not like it. The market didn't like it. What setup y'all like better? Y'all like this one? Put in the chat for me. One for this, or 2 for this. 1 for this setup, 2 for this setup. Which one y'all like better? I'm trying to decide. I like this, but I feel like this cool too. But let me know in the chat if y'all in here paying attention. But yeah, so the feeding greed index is at 1 right now. I mean neutral. It's at neutral right now. It's at 50. So can't really complain too much. The VIX right now is at 20. It's been spiking. The past day it spiked up a lot, up 20%. Up 20%. Up 20%. Up 20% from the last one. Yeah, like I said, from that jobs report, data came in way more employment than what was reported. You know what I mean? We could have had a rate cut on the past meeting with Jerome Powell, possibly, if this data was accurate. You know what I mean? But um I don't know. And those who don't know who Jerome Powell is, let me shed some color on that. Okay. This is Jerome Powell. This is what I'm talking about right now. He's a chair of the board of governors for the Federal Reserve System. He's a powerful figure in the U.S. economy because the Fed plays a crucial role in setting interest rates and managing the money supply, which influences inflation, employment, and overall economic growth. So, dang, he's 72. He's old. He's still working. Dang, he's 72. What's up, y'all? I appreciate y'all doing the chat. We currently going over the Robinhood portfolio update, just shedding some color on the past couple of days, markets, things like that. Let me know in the chat which view y'all prefer. One for this view, two for this view. One for this view, two for this view. Let me know which one looks better. But yeah, I was shedding some light on Jerome Powell saying that the jobs report, unemployment came out way higher than expected. And I was saying Jerome Powell could have lowered the interest rates if he did. And this is just to give some color for people who don't know who Jerome Powell is. But he manages the interest rates, the money supply, all that type of thing. So if interest rates go up, your car, which affects your car, you like the two? Okay, all right, baby. So if you like the two, what was I saying? All right, bet that's straight. Now keep it here. But yeah, Jerome Powell, he sets the interest rate. So if your car loan goes up or your mortgage rates go up, this right here is the dude that's causing it whole time. Like this the dude. Now he's done pretty. I'm not gonna speak on that, but it's cool to look best. I appreciate you. I'm gonna go with the two. But yeah, he sets the interest rates. If your car loan go up, interest rates go up. Woo, woo, woo. He causes it. He tries to regulate it. It's a very hard job. So take it with a grain of salt. So he's not always going to be right. But yeah, this is the dude that controls all that stuff. He's 72. That's kind of crazy. But yeah, the VIX, for those who don't know either, if you knew, basically is a volatility index. So it shows how volatile the market is right now. So over the past 5 days, it's up 33%. So that's pretty high. So it's been a lot of, a little uncertainty. Like I said, with the unemployment rates going up, that definitely had a big sell-off. Now, what I'm going to want to do is go into the Robinhood portfolio update. So right now we're sitting at roughly $3,200 in the account right now. Yeah. So on the week, we up 1.6%. That's pretty cool. That's good. Hey, we in the green. That's all that matters. We up $52 right now. On the month, we still up 15%. That's very strong. We're at all-time highs for this portfolio. Over the past 3 months, we up roughly 50%. That's roughly a band. I mean, we made 1,000. So that's roughly like, what's that? $350 a month, 325-ish a month, 330-ish a month. And passive income right here, just from investing, my capital. I've only invested, well, let me keep going. Yeah, we're up for 50% a month. Year to date, we're up 34%. Year over year, up 50%. All time, we're up 45%. I invested $2,222 in this account. Is currently at roughly 1,000 profit right now. And a lot of that came from these past 3 months because, a lot of this came from the past 3 months because the dip, if you tune into the channel, bro, like if you tune into the channel, I was covering all of this. You know what I mean? If you've been tuning into the channel, I've been covering this whole portfolio the past year. To be honest, I've been consistent with the stock, probably the past 6 months or so. But I show you the stocks I was buying when they were at lows. AMD was at $100. I was buying 80 at 90, $100. It's at 180 right now. That's 100% return on your bread. You know what I mean? You threw 10 bands in there, you get in 10 back. That's That's great returns, bro. Where else are you getting that? Leave a comment if y'all think y'all getting that somewhere else. But where else are you getting that type of return? You know what I mean? So that's why I love the stock market so much. And it's low effort. I'm gonna say it's low effort. Once you know what you're doing, it gets easier. But it's starting off, no, with the research, nah. But main important thing is the capital. You gotta have the money. If you don't have the money, the resources to deploy into these investments, there's no point. You need money. So that's why you always you gotta have more income than debt at the end of the day to even start investing. You gotta have a surplus of income to put that money up when you don't need it. You don't need it for the next 1-2 years. My opinion, I don't need this for the next 5-10 years. I'm trying to grow this long term. So these gains right here. Oh wait, let me put this back up. Long term. So these gains right here. Look. This has been my methodology with the stocks too. I'm literally okay. This episode, I'm gonna give you a little bit more game on the stocks too. I'm gonna dive a little more deeper. If you stay into the whole thing, I'm gonna show you my retirement account up here. I started this retirement account, Roth IRA. Earlier, I started in April during the time of the dip. I put some new money in there. Started some new positions just to show I can do it again. And I wanted to do some different plays that I didn't really want to show on the live stream initially. Now I'm cool with it, but so stick around if y'all want to see that play. I got a couple call options in there, and I'll go over this because I don't know where people are listening from. So I got call options in there, and I have some other speculative plays, but I'll go over it. But I forgot what I was about to say. I'm not even gonna lie. I was about to say something else. Oh yeah. So this is my point right here. So y'all see the stock portfolio right here. Over the past 3 months, I'm up 50%. You know what I mean? On the past month, I'm up 15%. So I just want to put this in perspective for y'all. It's about the amount of money. The percentage return is what is great. Now, you might not see big gains with 15% this month because I've only invested $3,000. You know what I mean? So I made $400 this month. Most people gonna be like, $400? That's not, I can't do nothing with that. What am I gonna do with that? This is why you need to get volume though. Say you stack up 50 grand. Go to my last video, drive a beater car. Imagine you stay down, drive a paid off beater car for 4 years instead of paying $30,000 for a car over the next 4 years. So let's use that as an example, 35,000. And let's say I got that invested in here and I get a 15% return in a month. What's that number right there? What's that number? You made 5 bands this month. That's a salary. That's a salary right there. That's a salary. Now we talking. That's a salary. You know what I mean? If I'm making sense, let me know in the chat if I'm making sense. But this is what I'm saying. People be looking at this portfolio and it's like, I'm not listening to somebody who got $3,000. This is just for the public. I'm not trying to put my whole joint out there just yet, but it's for the public right here. As you can see, I show proof on the channel. 15% return. I just $35,000 car. You know what I mean? Stack 35 bands, 15% a month. You just made a monthly salary, maybe, and then some for some people, depending on where you at in your yearly salary. That's 5 bands right there. Now let's look at the 3 month. I'm up 48%. It's just all about volume. It's all about volume. Now, so we take that same $35,000 car that I use delay gratification on, and I get a 50% return in the past 3 months. That's $17,000 right there. That's $17,000 in 3 months. That's roughly $5,800 a month. And of course, you got to pay taxes on this. You got to pay taxes on this and everything like that. But it's the stock picking that's really important in the return, the percentage return. Don't pay attention to the number, but so much. That's why in one of my reaction videos today, I got a video on why investing takes so long. It takes the first 10 years of investing is so hard because I'm showing y'all right here. It takes time. You got to let it compound. I'm trying to get this to 10,000 by like, let's say in another year. Let's see if I can get some more monies in here. Let's say I say 6 to 8 months. I say 6 to 8 months. We're gonna see that 6 to 8 months for real. But yeah, that's a little rant. I just wanted to share, get it off so I can clip that up too. But yeah, don't focus on the amount so much, guys. It's Get comfortable investing and putting money in here. And then once you scale your income, don't increase your lifestyle. Use that extra money to throw in the market, throw in your business, throw in investment, real estate, whatever your thing is, and go from there. You know what I mean? Because I feel like stocks investing is probably one of the closest forms of passive income that people always talking about. There's really no such thing as passive income, but because this still requires work. But if you want something close to passive, the stock market probably your best choice. But let's go ahead and get into some new things. I did end up purchasing some more Bitcoin. I put $10 in the Bitcoin. Oh, did I put 10? Yeah, I put like 10. I'm actually down, but I put a little 10 in Bitcoin, diversifying this portfolio a little more, trying to beef it up. Been doing a lot of research on Ethereum and stable coins and tokenization, things like that. But that's another video. But I put a little $10 in Ethereum too. Cryptocurrency. Pretty sure you all are pretty familiar with crypto if you heard of it. Now let's see. What are some new stocks? What was the portfolio? Nvidia is up 80% right now. Nvidia has been hitting all-time highs, bro. What's all-time high on Nvidia? 52-week high is 183. It hit all-time highs not too long ago. Yep, right here. This past week, Nvidia hit all-time highs, man. Woo! Good feeling, good feeling. But we have 80% on that. The job's not done yet. The job's not done yet. Next we got Meta. Meta had great earnings this past week. I may cover that, but you know, the past week Meta was up 4%. It was up 10, but it sold off because of the employment rate. But yeah, Meta has been doing great. I'm up 23% on that. Did I put some more money in here? I don't think I put that much. Just the regular DCA. If you've been following me, I've been DCing into these companies, but Meta's doing good. You see right here, had that big jump from the earnings report. Beautiful earnings report. Beautiful earnings report. Beautiful earnings report. Leave a comment for me if y'all following me. I can see it's like 4 people in here. So leave a comment if y'all following me. Appreciate y'all tuning in. We currently going over the stock portfolio. Make sure you like, comment, and subscribe. JRuss on all TVs. And yeah, appreciate y'all tuning in. JRuss TV, Business Investing in Sneakers. All the social media platforms right here. Follow me on X, Twitter, Instagram. And yeah, appreciate y'all. Let's get to it. So next we got AMD. That's my baby. AMD is the golden, the chosen one. AMD is the chosen one. But yeah, still doing my weekly buys. I can see 250 on Friday, 250 on Monday. Wait, yeah, that's $5 a week. It don't take much. I'm trying to show y'all. Slow and steady wins the race. Don't look at the numbers. You got to build the good habits first of investing. Don't look too much at numbers when you first starting. It's gonna be low. But when it start compounding, brother. I'm telling you. But yeah, so AMD has been doing good. We hit all-time 52 weeks high, thanks for AMD as well. Semiconductor company similar to NVIDIA for those who don't know. Similar to NVIDIA that powers ChatGPT, power all this AI technology. The high is 182 as well. This and NVIDIA are kind of, like battling each other in a way. If y'all get what I'm saying. Similar, same industry, but AMD is a little bit more versatile with their chiplet platform, their chiplet moat, and just Lisa Su, the CEO, being a visionary leader. Being a visionary leader, you know what I mean? So I like AMD. I think it's going higher after earnings. Earnings is coming up next week. We got a lot of earnings coming up. I think AMD is going higher. And yeah, I love AMD. It's 23% of this portfolio. It'll probably grow into the top holding here soon. I see this hitting 220, getting back to all-time highs easily. If it hit 20, all-time high thing, I thought it was like 220. It may have hit for a brief, but it says 207, and we're at 180. AMD's hitting 2.7. It's blowing through that. It's blowing this. It hit 207 here for no reason, and the fundamentals weren't making sense. That's why it dropped so much. But now the fundamentals are making sense, and people starting to understand it a little better. Going over 200 easily, too easily. Next is SoFi. Man, SoFi going crazy too, man. SoFi is going crazy too. SoFi on the week is actually low down. On the week is up 20%. 3 months was up 66%. Dang. Yeah, man. SoFi went crazy. We had a nice run. I'm up 34% on the SoFi. I was following the channel. I was buying heavy early this year. And it's just now green on it, right? When you first start a position, it's going to be low. You know what I mean? It's going to fluctuate between maybe positive and negative, but you got to, it probably take 2 to 6 months for the play to really hit, you know? So stay down. Stay down. Average cost is $15.73. I'm up 21, not 15. This is a fintech platform. They do student loan refinancing, private loans. It's a brokerage as well. They want to be the one-stop shop for all things financials, which is cool. I do own Robinhood as well. I like Robinhood, but my strategy, you can own two players in the same industry if they're doing well. I own Nvidia, I own AMD, I own Robinhood, and I own SoFi. So that's a strategy. That's one of the strategies I use. That's a good game. That's one of the strategies I use. And it helps easier with the research too, because owning these stocks, you do a lot of research. So you wanna this is mine. People like diversification. Concentration is what make millionaires, in my opinion. But when you're doing research, if I can just do research in just the fintech space, the financial space, and I can cover majority of my fintech stocks, perfect. If I can cover the chip space, that covers AMD and Nvidia, perfect. I don't got to do 4 different industries I got to study. You know what I mean? This is the same industry. So if one of the companies doing good, the other one's probably going to be doing good following up soon. You know, that's what I mean. Because this does take research and some time. I put a lot of time in research. So, but next we got Hims. Hims making a nice comeback as well. Novo had their earnings and it tanked, and Hims went up. If y'all watched one of my past videos, Hims dropped like 30% in a day due to they ended their Novo Nordisk ended their partnership with them. It's a big healthcare company. They ended their partnership with Hims, and it fell down massively. But now, I think it was right here. Yep, for the 60 to 41. You know what I mean? And now it's back up. That's what I'm saying. Time in the market. Time in the market beats time in the market. Time in the market beats timing the market. Time in the market beats timing the market. Put your money in there. Let it sit. Let it work. Trying to time it in and out, sell, buy. I'm going to time before. No, just buy, hold. Time in the market is what really creates wealth. Let it sit. Roughly 18% of my portfolio, up 43% right now. But yeah, if you're not familiar with Hims, it's a telehealth consultation platform. Connects consumers to healthcare professionals. You probably seen a lot of their ads and stuff online. Let me show y'all for those who not. This is Hims right here. Yeah, I've probably seen the branding and stuff, probably ads on YouTube or whatnot, you know. So yeah, let me make sure my audio is along. Yeah. So, yep. So that's Hims. Okay. What time are we at? I'm at 26 minutes, almost 30 minutes in for this one. Cool. Lastly is Zeta. This might be a little longer because I wanna get into this retirement portfolio too. Last one is Zeta. This is my newest position. I just dropped a video on, doing a little bit more deep dive into Zeta. So I ain't really gonna say too much on this one, but this is my newest position. I think I don't got that much bread. I got $94. I'm gonna save this for a dip. I'm gonna save this for a dip if we did. Well, we just did actually, but I just recently put money in here, so I'm gonna keep the 95 in for right now. I'm not gonna do no more, but that's my portfolio right here. Now, if you've made it to this far of the video, I'm gonna go into if you made it this far in the video, appreciate you tuning in. Now I'm about to go into my retirement portfolio. So this is going to be a new portfolio that I started in April during the dip. Had some extra funds, some extra monies. I split it up into the traditional brokerage account that I've been showing y'all, but I didn't show y'all my retirement Roth IRA. So this one I've been doing a little bit more. It's still high growth stocks, very similar to here, but other companies that I really want to make this portfolio. So yeah, I'm going to show y'all that. Probably I won't show this every week like I do the regular one. This might be an every now and then type of thing. If you know, you know. But if you tuned in to the videos, y'all getting a sneak peek. And this would be a good game if you really just now getting into the investing. You know what I mean? So yeah. This is my retirement portfolio that I built up. I've been building up since April. All time we're up 32%. Now, if you're not familiar with the Roth IRA is, it's a tax sheltered account. Roth IRA is a tax sheltered account that you put up to like $77,000 a year max after post tax contribution. So if you get paid from your job, whatever you get paid from, you put that into this account, only up to $7,000-ish a year. But when you withdraw, it's all tax free versus the account I've been showing y'all. If I sell something, I got to pay tax on it. The Roth IRA is all tax free when I withdraw it, but you have to be like 59 and a half. So that's why I'm doing these option plays in the Roth IRA, because it's more of a tax shelter. I don't have to pay taxes on this when I take it out. Now, this portfolio is it's actually for someone else. I'm managing it, but yeah, they'll be turning 60 in relatively in the next 4 years ish or so, 4 years. So this is great for them. You know what I mean? This is great for them. Because they're going to be getting some good returns on whatever money they give me. Hopefully, I'm hoping they can give me some more, but great returns on this. But let's dive into it a little bit. So as I can see, I got my Zeta in here. Of course, I got my Zeta. I got my Palantir. I have one share of Palantir in here. And it's crazy because I bought this at 122 when it hit. All-time highs were 125, bro. This goes to show you can't time the market. Timing the market. I bought Palantir before their last earnings. You know what I mean? And it went to 125, then it came down to 122-ish. I said, forget it. I'm going to buy it. It has not gone down since. I'm up 26% off of that as it is. And this is buying at highs. You know, now can it dip back to 90? Cool. I will buy more happily. Can it dip to 110 again? Yes. Can it dip to 90? Probably, maybe. I'll buy more, but ain't no trip over there. Palantir is they build and deploy software platforms, operating system for commercial and government segment. So think big data, think software, think AI, big AI, government AI, like high security clearance, all that type of stuff, like big dog. Next, we got more AMD. I love AMD. So I had to put it in here. I bought about one share, 18% of this portfolio. I bought at 109. We're at 170 right now. So that was a great buy here. That was a beautiful buy here. Beautiful buy here. That was a beautiful buy here. That's what I'm telling y'all. Just tap in with me. You tap in with JRuss TV, I make you rich. Tap in with JRuss. This is not financial advice. This is not financial advice. Tap in with JRuss TV. We rich. We rich. Tap in with JRuss TV, I make you rich. But just I'm just showing y'all what I do. I'm showing y'all what I do. Not stock investment advice. Just showing y'all what I do, man. I'm just showing y'all what I do. Cool, you know. Just showing y'all what I do. Appreciate y'all still tuning in. Follow me on Instagram, X, JRuss TV. But yep, I need to finish this segment up though. Next, we got more hymns. I just went over hymns in the last one, so y'all good on that. Average cost is $46. I'm up 33% on the hymns. Add in Robinhood. I love Hood. Hood. Actually, I might buy more of this on open. How much cash I got in here? I got $2. Dang. I want to buy more hood at 99. Oh yeah, at 99, yeah. I'm gonna see if I can buy some on Monday. 99 in this portfolio. I'm not against it. I bought this at $57. Crazy, crazy returns, bro. Crazy returns. And then Fubo TV, short Disney deal going through. Disney will be buying 70% of them, owning 70% of Fubo. Fubo will be a separate entity and still have owned 30%. I got in some shares at $2.65. I literally hit the bottom. I hit the bottom precisely on Fubo a couple months ago. Not even a couple, it was like a month or some change ago. So I'm up 42% on that already. It's been breaking out, bro. It's been breaking out. Y'all can see right here in a month. This day right here, we had some news. They released like preliminary Q2 results. Their earning report is next Friday, August 8th, and they had good numbers. They gave very, very good hints that the deal is going through. The Disney deal is going through. So this is why it jumped to 427. Then it went back down. A lot of manipulation has been happening, but bro, it's crazy. We're still in the threes right now. If this right here is a stock I say buy. I usually didn't say buy, but like buy this. It's very undervalued right now compared to the potential over this next year. And I think it's going to do pretty good. Fubo TV, it's a sports first streaming platform. You can do some research on it. And I even have calls on here too. Now, call option is essentially, I'm gonna put it on. Call option essentially you can leverage if you think a stock is going to a certain price, you can kind of leverage some call options, what they're called, to have access of 100 shares for a premium. Instead of buying 100 shares, you can buy a contract that has the same traction as 100 shares for a premium. It's very risky. It's very risky, but if you want to see amplified gains, this is a strategy you can use. But it's very risky. Warning y'all, it's very risky. I'm not a financial advisor, but it can also magnify your losses. So if this stock goes, well, let me give you an example. Let me show y'all right here, bro. So essentially, I can simulate my returns. So if Fubo, if the deal don't go through and this joint go back to $2 or whatever, I'm losing $78. I could possibly lose all my money that I put in, but I don't think that's happening. I could lose a lot. I can lose it all. Is my screen showing? Yeah, it's showing. I could lose it all, bro. But me personally, in my research, once the Disney deal goes through, this bad boy is going to $8 to $10 plus. Oh, you say? All right, bet. This junk hit $8. I'll come up $600. I come up $600 right now. You know what I mean? Is this similar to gambling? Not really. This is more of a calculated risk. I wouldn't say gambling. It's more of a calculated risk. But yeah. If it goes to $8, I come up $468. If it goes to $10, I'll be up $700. You know what I mean? And that's off of what? $110 investment. I put $50 in, then I put $110 in here. That's off $110 investment. That's going to be a crazy return. You know what I mean? It's not financial advice. Like I said, do your own research, do your own due diligence. But this is one of my strategies, and I have it expiring. It's certain expiration dates. I have it expiring January 2027. So I have like a year and a half for this expires. So I like doing long. These are called leaps, long equity. What do they stand for? Long-term equity and anticipation securities. Anticipation. It says it right there. Anticipation securities. You know what I mean? And yeah, so I have until January 2027 to expire. So it gives me time. It gives me more leverage to use time as an advantage in case anything can happen. Because when I put this in, when I started this, I didn't know when the Fubo deal was really going through. It could have not gone through. So I'm pretty confident it's going through. It still hasn't gone through yet, but I'm getting signs that it is. And I'm getting signs that it is. And, you know, like I said, I think it could be good. We're already up 14% already. Y'all can see right here. We up 14% right here. Yeah, so this is just the beginning. This is just the beginning right here for this. And then I'm gonna put another call in for Zeta, a $25 call for Zeta. Shoot. Another $25 call for Zeta as well. So hopefully that should be going through. They have earnings coming up. I think this is very undervalued stock. That's one of my strategies too. I buy leap options on companies that I've done research on. Hold on, put a big string. That's another strategy. I buy leap options on companies that I've done research and due diligence on. So why not? You know what I mean? I've done a lot of research on AMD, so that means I'm gonna buy AMD leap options if I think it's going higher. You know, I did a lot of due diligence on if the premium is in my budget, because some of these premiums be like 500 for one contract, 1,000 for one contract, but the return is still good. Sometimes you gotta pay a premium, but I don't have that much capital right now to do that. So if I can find something a little lower, that's cool. And I still have commission on the stock, cool. You know what I mean? But that's one of my strategies I do there. I've done this. I don't really do leap options that often, to be honest with you. I don't do leap options that often. On average, right now, it's been like every 2 years I've been doing a leap option. And I like that timeline because I don't want to just do a whole bunch. I want to really do my due diligence. Like I said, these are really risky. These are really risky strategies. So be on research, but I think this year I'll have a great year with leap options and make a lot of money. You know, that's what it's all about. You feel me? That's what it's all about. But I appreciate y'all tuning in for this segment. I'm gonna go ahead and get into some live reaction videos. Thank you for staying this long. That was my little treat for y'all, showing y'all some cool little my retirement portfolio. Like I said, I won't be showing that every week, but I'm gonna keep that updated. Still tune in to the videos. Lock in. You might be able to come up some racks. You know, you might have more money to put in some of this. You might come up some racks. You know what I mean? Shoot, free game. I'm not even gonna lie to you. Free game. Free game. Oh, hold up. Free game. Free game. So what's up with y'all? Welcome back to JRuss TV. If you're on my channel, we cover business, investing, and sneakers. That's something you're interested in. Consider subscribing to the channel. If you're new, appreciate you tuning in. If you're returning, appreciate you tuning in. Next, we about to get into why even high earners are living paycheck to paycheck. The economy is expensive. Everything going up. Cost of living going up. You got to keep investing money. That's why everything come back to the money. Everything come back to the money. You know what I mean? But let's see what they saying. And let me make sure y'all can hear.
Americans, work can feel like a hamster wheel. No matter how hard they run, it never feels like enough. Americans, on average, say they would need $520,000 a year to feel rich. And the more people earn, the more they say they need to feel comfortable. Americans making under $50,000 felt they needed $157,000 a year to feel comfortable. Those making $100,000 or more said they would need $246,000.
When I was in middle school, a song came out called Mo Money, Mo Problems. And I think that that's true. Your problems scale. You still are dealing with a finite number every month. Your worries, your anxiety, your budget scales to that. You still are dealing with a ceiling.
About 14% of all U.S. households make $200,000 or more every year. But many of them, dubbed
Wait, what?
U.S. households make $200,000.
You still are dealing with a ceiling.
About 14% of all U.S. households make $200,000 or more every year. But many of them, dubbed Henrys or high earners, not rich yet.
This is what Kevin Samuels used to say. His terminology was high earners, not rich yet Henrys. That's interesting. That's interesting. But 14% making more than $200K a year, still living paycheck to paycheck.
But
let me know in the comments. Is 200 too little for y'all? Is 200 enough, or is that more than enough for y'all? Me, I think is 200K enough? I think it is. It's like, nah, I don't think. I know. I know. It ain't no thinking. 200K is enough. You tripping. Now, if I had kids or something, I could kids, wife, multiple kids, private school, that can eat up quick. But young, single in the city, 200K, I have a ball.
Many of them, dubbed Henrys or high earners not rich yet, still don't feel rich. 62% of people with salaries over $300,000 a year struggle with credit card debt.
Earning doesn't actually make you feel rich. Spending it does. If most people spent 99% of their paycheck, they'd feel quite rich. And it's the paradox here. When we're in accumulation mode, it's very difficult to feel rich.
It can be pretty easy for someone to feel like I'm making really good money, but I don't have a lot of discretionary income.
Earning more and feeling like you're still on a hamster wheel is what a lot of Henrys experience. And that's because they're not living within their means. They may have been living above their means when they weren't nearly making as much money. And now they're just continuing to add more and more and more.
I earn $300,000 and I live in New York City. I definitely don't feel rich. I feel very lucky. I feel privileged, but
Where you live at plays a big role as well. So do got to pay that in consideration, the high cost of living area. I'm going to speed this up a little bit.
I do not feel rich. I could not stop working right now. I have more money anxiety almost now than I ever did in my 20s. I am on a hamster wheel and there's no question about it.
Are cash rich and asset poor. So they're typically people under 40. They don't have childcare hours available. They're first-time home buyers in the housing market. They're paying off student loans early, hopefully. And their income usually hasn't hit a career peak. So they're very much in that not rich yet bucket, but they very well could be in the future.
Oh, I 100% feel like Henry.
Marian Contreras was a professional composer, band leader, and pianist who started her virtual assistant business in 2016.
That year, I started to grow slowly and I was suddenly earning more money than I had ever earned in my life. And I think the number was something like $35,000 by the end of the year.
Something they said too, high earners not rich yet. She was saying basically they're earning a lot of money, they don't have no assets. So the cash is just getting blown. That's why here at JRuss TV, we all investing. You gotta stack the money up and build assets that you can leverage from. You know what I mean? Real estate, you get your own business, stocks, whatever, you may have it. But yep.
Wow, this is really great. I can grow this.
She then expanded into a digital marketing consulting agency during the pandemic.
For the calendar year of 2025, we're just on track to make 1.4 million. We're hoping to get to 1.5 or possibly even 1.6. I'm anticipating my owner's draw to be anywhere between 300,000 and 400,000. Had a pretty successful career as a musician through most of my 20s. The thing they don't tell you about having a career as a musician in music school is that you can be playing Carnegie Hall, which I was, and I was making $15,000 a year. And I didn't realize how much freedom money affords you. Now that I see the kind of freedom that somebody who earns what I do or even more has, that's my goal. That is absolutely what gets me out of bed in the morning.
A lot of the high earners, not rich yet, they're first generation wealth. So they still take their wealth into perspective against their family members or others in their community, and they realize how well they're doing. So they don't take it for granted. But I think what makes them feel not rich is we were told once you make six figures, all your problems will go away. You'll just have so much excess. And
Cap. They sold us that dream, bruh. They sold us that dream talking about 100K. All your worries will go away. I thought, hey, cap, bruh. They cap. I'll get back. Sorry, my fault.
We know that narrative is not true anymore.
I would have thought back then that the amount of money that I have in the bank right now, I would be rich. I would have just thought, oh yeah, she's made it. And I don't feel that way. I know that I am on a hamster wheel with my business. I actually really love the hamster wheel. I love what I do, but I also realize that I can't stop.
Welcome to the ARC Venture Fund. To date.
So Henrys often don't feel rich compared to others. They work very hard for their money, but they also spend a lot more than the average person.
In a lot of ways, Henrys may be victims of their zip code.
$100,000 in LA is definitely very different than $100,000 in Iowa. Someone makes $200,000 a year in LA. They're going to probably take home $140-ish. Rent for a one bedroom is going to be at least $3,000. Their car payment's going to be $700. Car insurance is going to be maybe $200 a month. Gas is going to be $200 a month. If you were to annualize that, that's $50,000 right there. The remainder is for all the other things. We haven't eaten yet. We haven't purchased groceries. We haven't paid for subscriptions to Amazon and Netflix. We haven't gone on vacation yet. We haven't purchased clothes yet. It can whittle away your discretionary income if you're living in an area that has a high cost of living.
When my business started to grow, one of the first things that I started spending more money on right away was food because I don't have time to cook. I had more money than time. And so I started eating Grubhub 3 meals a day most days. After that, it became rent because I hit $1 million a year in revenue. And I said, that's it, I'm moving to Manhattan. And so my rent doubled and I suddenly was paying $4,000 in rent. What is very worth it to me is to live where I want to live. I was proud that I could.
See, that's where you mess up. As soon as y'all start making a little bit of money, as soon as y'all start making a little bit of money, bro. Hit your first million, hit your first 300K. She said her business made $1 million. She took home like 300K out of owner's draw. If you're not familiar, owner's draw is when you can take money from your business to pay for yourself. When you start making the money, you don't go and increase your lifestyle instantly. That's what I've been telling you on the channel. You don't increase your lifestyle instantly. You stack that money up for another year, 6 months, depending on how much you get. 6 months to a year, you keep stacking it. You stack it. You stack it. You invest it. Then you go and you might move up a little bit, might get upgrade the car, the whip, get some more designer. That's when you do it, not in the beginning, because you ain't save up no cash yet. You ain't save up no type of cash yet. Telling y'all, man. I'm telling y'all.
Live here for about a year. I would walk outside my apartment and just like look around and just be like, oh my gosh, here I am. So that was lifestyle creep for me.
Lifestyle creep is the common phenomenon of spending a little more money as you earn more. It can happen to anyone at any income.
Lifestyle creep can really sneak up on you. You start earning more and then you decide, well, I can buy more things. I need a second car. I need a bigger home. I need to go on this European vacation. I deserve this European vacation because I work hard for my money. The problem is if you're not continuing to increase your savings at the same time, you are putting your financial future in jeopardy.
That shift happens everywhere in our lives, from the small purchases to the really big ones. Cars, houses, vacation, and most of these expenses are fixed.
Lifestyle creep impacts almost all tax brackets, but it can take different forms. One 2024 study found that when low and middle income households were given an additional $1,000, no strings attached every month, their spending increased primarily on basic necessities, such as food, transportation, and rent. However, when higher income households were given the same $1,000, they increased spending on both necessities as well as discretionary expenses, like Marie did.
I spend more on my hair. I spend more on makeup. I get my lashes done. I get my nails done. I think it's just something that comes with the territory.
Birds of a feather tend to flock together and their spending tends to be more aligned. If you make about $85,000, your friends probably also make about $85,000. So you're doing similar activities in the same economic bracket. Once you have friends that are making $200,000-$300,000 a year, your activities will change. The restaurants that you will eat at will differ and change. They're going to probably be a little bit more elevated. Your vacations are going to be more elevated. Your clothing is going to be more elevated. It's not necessarily spending irresponsibly, but they're spending aligned with their friend group and their community. That's why a lot of them oftentimes don't feel rich, because they're spending along with their friends.
Emotions are tied so tightly to what we do with our money. It happens to everyone. You get a raise, you're feeling great, you deserve to go out to dinner. In fact, you deserve to book that cruise. But the reality is that money was supposed to be earmarked for a bump up in your retirement savings, or money that you were going to put toward your child's education, or maybe you don't have an emergency fund, or at least not an adequate one, and the money should have gone there. When we allow ourselves to let our emotions overtake what we're doing with our money, we lose sight sometimes of what our goals are and how we have planned to meet them.
Henry will sometimes look to the mega millionaires or the billionaires and wish that they had more, but it's really just that upwards comparison for more that keeps them stuck. More will never be enough at a certain point, and you have to decide what you have is ultimately enough and start appreciating all that you do have instead of fixating on all that you don't.
Experts say the best way for Henrys to start to feel rich and to get off the hamster wheel is by budgeting and planning for the future.
You can't really figure out if you're rich yet unless you know where you stand right now and where you want to go. You can't really figure
instead of fixating on all that you don't.
Experts say the best way for Henrys to start to feel rich and to get off the hamster wheel is by budgeting and planning for the future.
You can't really figure out if you're rich yet unless you know where you stand right now and where you want to go. You need to know your net worth. Doesn't matter how much money you have. It's not just for rich people. You have a net worth. What you own minus what you owe is your net worth. Everyone has one. Yours may be negative at this point, but you have to figure how to turn that around. Once you know your net worth, then you can start to build on what are your goals? What do I want to have in terms of my retirement savings, in terms of savings for college if you have children, in terms of emergency savings in case anything happens.
Hope you're taking notes. Yep. What do you want your net worth to be? What type of car do you want to drive? What type of car do you want to drive? You know, how much do you want a month in savings? You got to reverse engineer all this. You know, if you're saying you want $100K a month in retirement, What number do you need to hit that? How much saved and invested do you need to hit that? How much do you need to save for your kids' colleges? You know what I mean? These are things you need to do and put a number on and reverse engineer it.
Secure will I be? Once you have significant emergency savings, enough to cover, say, 6 months of your expenses or more, you're going to start to feel rich. Surveys have shown that financial well-being is tied closely to emergency saving. And so if you know that you're not going to have to whip out a credit card, that you're going to be able to pay for the roof that needs to be fixed or the car that breaks down, you're going to feel rich.
I think wealth is often an emotional feeling. It's a mindset to feel truly secure and not to have to worry about finances at all. Feeling rich, it can feel much more about the bottom line and the dollar amount. So one is more about the tangible number in your bank account, and the other more is a feeling. Most people aspire to reach a level of wealth where they don't have to stress or worry about their finances or even about the future generations, to know that there's a cushion there.
One of the things I focus on with my clients is a budget should be a representation of your values. The issue is you can't value everything. You have to prioritize it. And when people see the hard numbers of what they're spending on a monthly or an annualized basis, and they see, oh my gosh, I'm spending $5,000 a year eating out, I will ask the question, are you enjoying those meals at $5,000? Is it bringing you that much excitement and that much joy? And most people will say, no, Camila, it's not. The food is okay. I'm doing it to be social. Well, we'll talk about other ways that you can be social without spending $5,000 a year eating out. You can't buy clothes consistently, travel consistently, eat out consistently. You have to pick maybe one or two things where you're going to focus your discretionary spending and then take that extra and reroute that to savings so you can start feeling rich.
Spending gives us immediate dopamine fix, and seeing wealth in an account with numbers and commas often can be far more satisfying, though we don't realize it in the moment. It's almost like the difference between an exciting, yet very toxic relationship versus a secure and stable long-term partner. I think the feeling of safety and the feeling that you can weather this long-term financial storm is far more satisfying, and we have to train ourselves to value that safety over the quick fix of a fancy car or a shiny new watch.
My advice for somebody who's on the hamster wheel is understanding the trade-off. I could get off the hamster wheel at any time, and I know that. And I know that my circumstances may change. For right now, this is the answer for me. My advice to somebody who's feeling that anxiety is understand that this is a choice. There are trade-offs. What I have learned is that I have been very burnt out and exhausted as a person who doesn't earn a lot of money. And I have been burned out and exhausted as a person who does earn a lot of money. And I would take being a person who's burned out and exhausted and has money any day of the week. I would rather do that than be burned out and tired and also worrying about my bills.
Main lesson here, when you get more money, don't increase your lifestyle so much. A little bit. Enjoy yourself, but don't increase it so much where you starting to live paycheck to paycheck. You know what I mean? Appreciate y'all tuning in. Appreciate you doing this reaction video. And let's get to the next one. All right, so the next one we're going to get into is, what's up, family? About the JRuss TV. If you're new to my channel, hit that like, comment, subscribe. We cover all things business, investing, and sneakers. If you're returning to my channel, appreciate you tuning back in. The next segment we get into is why the first 10 years of investing feel so hard. I was just going over my stock portfolio. If you want to look into that, check out the channel. Look at some of my old videos, my old live streams. I cover my stock portfolio. But I'm starting from the bottom, and people have commented and said, you only got a couple thousand in there. I'm trying to show y'all why the first 10 years is so hard, because when you starting off, you know, young like me, I'm 25, it takes time to build this stuff out year after year. But let's go ahead and get into it. And yeah, actually, let me stop sharing first, and then I'm gonna reshare, because sometimes the value don't want to go through. There we go.
Okay. Wants to max out a Roth IRA. This is for every person out there who's ever maxed out a Roth IRA, wants to max out a Roth IRA, or trying to decide if they should max out a Roth IRA. We just want to show you how compelling this can be. So let's assume that you're going to max out your Roth at $7,000 a year, and you can earn 8% on average. You're going to do this for the next 30 plus years, right? So all we're going to do, max out Roth IRA, $7,000 a year, right? Not super, super complicated. In the beginning, and Brian, you talk about the beginning, it might not be super, super exciting. You realize that it will take you almost 9 years, a little over 8.5 years, to where now your money earns more in a year than you save in a year. So up until this point, you've been doing a lot of the heavy lifting.
This is something that really bothers me, and I want to go ahead and warn you about this on the front end, because you're going to be in the first 10 years. Maybe many of you are just like I am, you know, and Bo is. We know that 80% of millionaires are first generation. So you're hearing a lot of these concepts for the first time. And a lot of you are going to go on this journey with us. You're going to get excited when you find out about the wealth multiplier and realize we're just showing this leveled out. The sad thing is when you invest, returns don't come in nice little 8 to 10% rates of return every year.
That's what I've been telling y'all. Now, the thing with these, with these content creators, great video. I love their content. I love those guys, but they usually think conservatively. They do 8-10% returns. That's cool for the person that's not big on investing. Here at JRuss TV, y'all see the returns we getting, bro. Let me just go ahead. I'm gonna put the portfolio up. But right now in the portfolio, year to date, we up 34%. We up 34% year to date. Y'all can see right here. So just keep that in hindsight. Most people, when you're starting your investment journey off, you're going to hear the 8 to 10% return thrown around a lot, which is very good base case, in my opinion. Bear case, base case. But if you do a little research, you do some studying, like I've been trying to show y'all on the channel, you can get 35% return.
It's going to come in a jagged way at you. You go 1 year, you're going to make 20%. Next year, you might lose 7%. But over time, it's going to turn into somewhere between 8 to 11%. But here's what I want to warn you about. The first 10 years, a lot of you are going to quit if you don't have this knowledge. I want you to go into this with your eyes open, because what's going to happen in that first 10 years is you'll likely experience and live through your first and second recession. There will be 2 downturns in every decade typically. You will see market volatility. And when you see that your portfolio is going up and down, and then you find out that your money only doubled in that 10 years, a lot of you are like, what are we doing? And that's why, Bo, it's so important. I want you to set the stage for, it's not the 10 years to get you excited. You have to stick past 10 years. You have to stay 15, 20. And we're going to show you the why, because many people don't give you the actual illustration or the result of why they have to do it. But I just want to tell you, eyes wide open, do not quit in the first 10 years. You will feel every desire, because this is hard to save and invest. You will feel every desire to quit because the messy middle, the kids, everything's going to be happening. Don't do it, because here's the payoff.
So 8.75 years for your money to make more in a year than you save in a year. But by the time you get to 15.8, almost 16 years, you have now hit that tipping point to where now the growth in your portfolio is larger than the dollars you've saved. Your money at this point has now worked harder than you. More of your account balance after 16 years is earnings than it was contributions.
Now, wait a minute. I want to make sure people hear this. After 15 years, getting close to 16 years, you will have made more money from the portfolio than you even put in contributions.
That's exactly right.
Do you see how this is exciting? Meanwhile, back just a few years earlier, in the first 9 to 10 years,
you're doing heavy lifting.
You just doubled your original investment, which is hard. That's not sexy, but you have to do it. The stick with itness has to be there for this all to work.
And then as you move to the end of the journey, if you do this for 32 years, do you recognize, again, this is just saving $7,000 a year, earning 8%, that in the 32nd year, your money now earns more every single month than you save in a year. It's growing by $7,000 a month at that point, even though you're only saving $7,000 a year.
This is why it gets exciting. This is why, we know the typical millionaire happens in their late 40s, typically after 27 years of diligent saving and investing. And when you get to I'm past that point, by the way. I'm in my 50s. And what's amazing is when you live in an area where, like we live, and you're.
I don't have 30. I don't have 37 years. I don't have 37 years. I'm trying to hit an M by 30. I'm 25. We got 5 years. I'm trying to hit an M on me.
You're around people like I am. We talk about this, and I talk to my peers, and we're like, can you just believe what the portfolio made last quarter? And I can't tell you which dollar I invested when and where is why this got to be so big. It was just those consistent small decisions that kept stacking on top of each other and built this great, big, beautiful tomorrow. But if I'd have quit anywhere in that journey, I would have never gotten to that 20 plus years to start seeing this aha. So that's why your behavior comes into play. The science of actually what the math is doing for you comes into play. Bo, now we ought to talk about what's the science of the economy, because is this something that can continue to keep going forward, or are best days behind us?
Yeah, it's really interesting. We talk about behaviors, what you can do, and financial science, what your money does. But now let's talk about the system in which we operate, because there are a lot of people out there that thinks, oh, the system's rigged against me, and this is only for the other people. And I would actually flip that. I would argue that if you are an investor and you are committed to long-term investing, the system presently is actually rigged for you. And if you don't believe me, just think about some of the structures that we have in place. Now, you're going to think when I say this, oh, these guys have lost it. With the tax system, we have a very unique tax system in this country. And whether you like it or dislike it, one of the unique things about it is the way that investment accounts, the way that growth opportunity accounts are treated is different from a tax perspective. And if you understand that, you can actually manipulate that to your advantage over the long term.
Well, yeah, without a doubt. We talk about this as the 3-bucket strategy. We're talking about your after-tax investments, your tax-free, which are your Roth investments, your pre-tax. This can be, because look, we know that pre-tax, this is this type of asset. So you want to put like your bonds and your fixed income, because everything's going to be taxed as ordinary income. You ought to know that. That's a variable you ought to understand, so you can put what needs to go in those accounts. Tax-free Roth. This is where you stick it to the man legally and build your 7-figure millionaire status without any taxes in the future. So you want to put growth type assets in those type of holdings, but you don't want to get too risky because you can't take losses on any of these type of investments. And then the after tax, this is where we want to build the bridge or other investment assets that you want easy access to, but also take advantage of the tax favor. And a lot of you are hearing this and be like, man, that is a lot to take in 1 or 2 sentences. The good news is you don't have to figure this out. We've already done this for you. The science is cooked and built.
Appreciate them boys for watching that video. You know what I mean? The first 10 years of investing will always be hard. The first 10 years of investing will always be hard. Show y'all the portfolio. Appreciate y'all joining in. Tune into some of my old videos on the YouTube channel. I show y'all my stock portfolio. But the first 10, I recently just hit a milestone 2 in my portfolio. I had 100% return in my Robinhood portfolio. And took 5 years. Long time coming. I'm gonna go ahead and show y'all. Well, actually, I'm at 87% right now though, because it went down. But yeah, see that? I'm trying to go. 87% all-time return on my portfolio, my Robinhood portfolio. I hit the number, but yeah. Year to date, we up 52%. Crazy gains. 52% year to date. 52% year to date. This past month, I'm up 10%. We had a big sell-off, as you all can see right there. 13% in the past month. But let me show y'all the photo I screenshot though when I did hit it. Either the market go up and down, so everything ain't always going to hit. Don't want to stay up. Where's it at? Here we go. 105% return on the stock portfolio. So yeah, man. First 10 years is hard. I did this in 5. I did this in 5 years. I started investing in 2020. I did this in 5 years. You know what I mean? So stay tuned. Stay tuned into the community, bro. You know, I can learn from y'all. Y'all can learn from me. Shoot, 5 years, we might hit an end. But appreciate y'all joining this segment. All right. What's up, fam? Welcome back to JRuss TV. If you're new to my channel, hit that like, comment, subscribe button. We cover all things business, investing, and sneakers. If you're returning to my channel, appreciate you tuning back in. Next video it's a survey that came out saying Americans say they need 800,000 to feel secure. I don't know if this is just for retirement or in general, but we talking retirement, 800K is not enough. For sure.
Are building businesses with AI, while the only AI we know is ChatGPT. Let's be real. Most people over 40 use ChatGPT like it's Google. Copy.
All right, in today's Money Watch, we are talking about saving for the future and retirement. A new survey from Charles Schwab reveals that Americans believe it takes more than $800,000 to be financially comfortable. It also shows about 1/3 of Americans do not have any type of financial plan. But don't worry, we've got you covered. CBS News business analyst Jill Schlesinger is here. Jill is here. Dollar Jill here is to break it all down. All right, so let's jump right into it. Why do you want to reframe the conversation about retirement? And what does that mean exactly?
Well, because when I went through the last, say, 20 to 30 years giving people financial advice, first as a business owner and then as a podcast host and here on TV, what I hear from people is, I'm not that interested in retiring, but I am interested in understanding when I can have more control over my life. I think it's a little bit of an outdated notion that everybody works till a certain date and we're done.
Yes.
It's that people want control over their lives. So it is a bit more like financial independence and how we can help people find a better way to keep working longer and be happier in their positions. And it doesn't work for everyone. I get it. But if we can give people just a modicum of control, they will approach.
What's up, y'all? Appreciate y'all joining in. Why I think Americans, oh, they left. I saw like a couple people joining and they just left out. Never mind. They ain't stay that long.
Their financial lives in a much better way.
Okay, let's do the modicum of control. If you haven't even started to plan, when should you start? Is there an age you should start? Is there a peace of mind you should start?
Right.
This is Pod 5, the first fully immersive sleep system. Intelligent.
Now, whoever you are, you're 20, you're 50, you're 60, and you're still working and you never run the numbers, here's where we start.
20?
Yes, absolutely. Because I think younger people understand. They've seen their parents and grandparents go through hard times. They know. So you start not with a rule.
Exactly. It's too many examples out here. It's too many examples out here for us to be lacking in this generation. Millennials or Gen Z or Gen Alpha. There's too much info. We've seen our parents. We've seen our great parents and the lives they lived. Some lived great. Some didn't do too well. We need to learn from their mistakes, but we need to learn from their mistakes. You know what I mean? We got to learn. There's no excuses out here. No excuses.
Of thumb, because that's kind of lazy.
Yeah.
Go to a retirement calculator online. When you do that, there's going to be some information you need. The biggest piece of information, how much money do you spend right now? If you don't know that piece of information, you cannot possibly do this. So it's your basics, it's your fun stuff. If you're a little bit older, maybe it's ongoing obligations. You've got aging parents you've got to take care of. You've got adult children. Now you know this is the expense number that I am trying to find. Once you have that, you are ready to start looking at the future. And the calculations will take into account how much you make now, how much money you're saving, how much money your company is matching, all those pieces. And it will give you a number that you can replicate where you say, when I get to a certain age, I will be able to create that much income in the future for myself. And don't forget, we're living longer. So if you are over the age of 40, you're going to still live till 90, 95.
Yeah.
And if you're under the age of 40, you might live till 100. We have to make sure people understand that the longer that life lasts, the more money we need to save right now.
So you're right. People should think about it in their 20s. When I met Katie in my early 30s and she'd been saving since her early 20s and her 401k, I thought it was the sexiest thing ever. I was like, wow, it's a responsible person. We were going places together.
He said, "Oh," he said, "Oh." If you know the TikTok, the Prom and Andre the Topic, there's some content creators out here. He said, "Oh." What he say? He get the flirting on the. He get the flirting on her. He get the flirting with her. Hold on. Let me read it.
So you're right. People should think about it in their 20s. When I met Katie in my early 30s and she'd been saving since her early 20s and her 401k, I thought it was the sexiest thing ever. I was like, wow, it's a responsible person. We were going places together. But tell us about those retirement accounts like 401ks, other options. What should people know about them?
Well, I think the first thing that you need to know is use them. What we understand from a lot of the data is that people say, oh, I can't save. But when they're automatically enrolled in a 401k or a 403b, they do save money, even when you don't make that much. So you want to automate it. So 401ks, if you start with a little bit, maybe just up to your company match or a couple of percentage points that you can put away, you can put up to $23,500. Most people are not doing that. More if you're over the age of 50, and if you're 60 to 63, there's a special little bonus you can put in. But the best way to do it is to automate it and then slowly but surely 1 percentage point a year every 6 months. That's what you do. If you don't have a plan at work, you can start an IRA or a Roth IRA. The same idea applies. A little bit at a time. Maybe it's $100 a month. You may never get to $7,000 a year for a couple of years. It's okay.
Well, you're throwing around a lot of numbers, Joe. Do the calculations, do it here. What if you do all that and the math ain't mathing?
I love it. That is exactly the right question.
What do you do?
Here's where you have some control. Those numbers, that's your baseline. you may want to fiddle with the numbers. Hey, what would happen if I saved a little bit more money today?
Right.
Hey, what would happen if I worked a little bit longer?
Cut back on this or that.
Exactly. And one thing to really consider during the pandemic, when I hosted the podcast at Jill on Money, we heard from people who were like, I'm fried, I can't keep doing this. And what we found is people needed an off ramp. So what we really started to do is look at people and say, what if you would make less money for a few years, but you could then keep working? That is a great idea. An off ramp is brilliant.
Jill, you're the best.
Home Depot is my off ramp. I'll be helping you find the flashlight.
Wherever you
There
need.
go. Jill, thank you very much. Appreciate it. We'll be right back.
In today's Money Watch, when it comes to retiring, how much money do you really need in the bank? The latest retirement confidence survey finds 67% of workers and 78%.
There's two videos right here. There's 2 segments. Oh, we killing that. What's up, fam? Welcome back to JRuss TV. If you're new to my channel, hit that like, comment, subscribe button. We cover all things business, investing, and sneakers. If you're returning, you already know what's up. Topic we getting into right now is new survey that came out. People say they need like 100K to feel safe out here, investing wise. I mean, retirement wise, we gonna see.
Of retirees are confident they will have enough cash to live comfortably through retirement. Yeah, that is good. But before you can call it quits at work, you need to set yourself up for success. And who do we call in when we need a little setting up
Jill
for success?
Schlesinger.
Jill Schlesinger, ladies and gentlemen. She is here with tips to make sure that you've got all your bases covered. Jill, so a lot of people think that they're all set. What is the difference, if there is, between what Americans think they need and what they actually need?
Well, first of all, it's very funny when I hear a stat like that, because I wonder how many of these people have actually run their numbers. So we do have some data that show that people think they need $800,000 in order to be able to retire comfortably, which is completely arbitrary, gang. I don't know whether you need $1 million or $5 million or $1 because you have a great pension. And in that same survey by Charles Schwab, what was fascinating is a third of the people have no plan. So I need the money. I have no plan. I don't know what I'm doing. And so this is why we make numbers up. People will sometimes say to me like, oh, I heard you need $1 million to retire. Again, it depends on your unique circumstances.
Right. People have future potential to take in money like Social Security if they fix it and it continues to operate and all the rest. How do they factor that into their decision?
You know, a lot of young people will ask me, should I count on Social Security? And the answer is yes, you should. See, I'm looking at the camera, so you know that.
Oh, good.
The reason is I think the system will exist. I don't know if benefits.
I'm not relying on Social Security. I ain't relying on Social Security. Social Security has never been factored into my investments because Social Security has never been factored into my retirement strategy. So if it's still there, God bless, more money. You know what I mean? If not,
will be curbed or not in the future. But the best thing to do is go to ssa.gov. Okay, that is the Social Security website, and you will set up a record for yourself. And the reason why this is important is the Social Security Administration website is really good in that it allows you to say, what would happen if I kept working at this job for a certain period of time? What would happen if I took less money? And it will figure out your Social Security benefit. There are 3 main ages to think about. 62 is the earliest you can claim Social Security retirement benefits. But doing so is a terrible decision because it will make your benefit go down permanently by 25% for the rest of the years that you collect Social Security. And if you have a non-working spouse who relies on that, that's bad for your spouse as well. The second age is called your full retirement age. It's generally 67 years old if you're born after 1960, and you'll get a bigger benefit for that. And if you wait 3 years longer, you can max out your retirement benefits at age 70. Every year you wait, it's about an 8% increase in your Social Security benefit. And you know the coolest thing about Social Security? It's indexed for inflation. So the longer you wait, the higher the benefit. The higher the benefit, you keep getting that cost of living increase on top of it. It's really valuable.
I didn't know that you take a 25% hit if you retire.
Yeah, at 62.
Okay, so how should people run the numbers to customize it for themselves?
Okay, so instead of rules of thumb, we go to a retirement calculator. If you have a plan through work, a 401k, a 403b, or if you just type in free retirement calculator into your browser, you will have the ability to put some data in. Now, the most important thing to know is how much money you spend today. I know it sounds silly, but you really need to understand the basics, the fun stuff, ongoing obligations. Do you have aging parents? Do you have adult children you're taking care of? That number is the key to your planning. Once you have the expense number, you can start plugging in, hey, what will my future be? And the future will be relying on Social Security, maybe a pension, also the money you save and continue to save, and the contributions. Once you get that number, you now have a better idea of where you stand today, and you can make more informed decisions about your own career and your own expectancy for retirement.
I will be Googling free retirement calculator later today. Thank you so much.
Sure.
And if you at home have a money-related question for Jill, send an email to her, why don't you? Her email address is askjill@cbs.com, and she could answer it in an upcoming
Yeah, my appreciate y'all. Appreciate y'all tuning into this video. Yeah, I hope y'all paid attention to this live stream. People saying, retirement is really dependent upon your own situation. Kids, wife, husband, mortgage, how much you plan to spend, not only just now, but in the future as well. So there's a lot of things you got put factor in when you're planning for retirement. You know what I mean? So man, it's you got to plan ahead. You got to plan ahead. I'm gonna put doing a head for retirement. I'm gonna put this up here for my thumbnail vibes. You feel me? Okay, but yeah, I don't think $1 million is enough. In my opinion, I need me personally to feel comfortably retired. Not just my single, just myself. I could retire off 2 M's. I could retire off 2 M's, but single by myself. Maybe less, but I'd rather be conservative. 2 M's. Family, kids, house, private school, all that stuff, multiple cars. At least 5 million. I need at least 5 million net worth. At least 5 million net worth retired, in my opinion. But to each his own. Some people could probably make $1 million work. I probably could make it work, but I have a different lifestyle. I have a different vision for my lifestyle. I don't really want to live a basic lifestyle. I want to live a nice lifestyle, comfortable. You know what I mean? But with that being said, man, appreciate y'all tuning in to JRuss TV. We had an hour 20 live stream. Appreciate y'all tuning in. If y'all made it this far, like, comment, subscribe. Follow me on my social media platforms. You feel me? We got all my socials up here. My X, my Instagram, my YouTube, all that good stuff. But yeah, I think that's everything I want to talk about. Yeah, I ain't chatting. So I mean, if you had any questions, I answer some questions or something. But I don't hear y'all chatting. Y'all not chatting. What's the word, chat? What's the word? It's like what, 3 people in here? What's the word, chat? What's the word? Who in here? I don't know. Ain't nobody chatting. But hey, you have a blessed Sunday. You have a great Sunday. And we're gonna tune in.